Right, in our last video we went through the income statement, so that is the first one that gets prepared. Now we'll take a look at the second statement to be prepared, which is the statement of owner's equity. The statement of owner's equity presents changes in owner's equity over a period of time. So what is owner's equity? That's the first question we need to ask. This is the owner's claims to the business assets. Or the amount owed to the owners. This is made up of a few different items. So the first thing, it's made up of, oh man, the tech, sorry guys, hitting the button on my pen. The first thing we will add here are investments. So any direct investments of cash or other assets by the owners. That is part of owner's equity because they're investing that money into the business. Eventually they want it back. So that is part of their claim to the business's assets. Next, we add in net income. Oops. The reason someone starts owning or running a business is to earn income and make money. So any of the income that the business earns, the owner has a claim to that as well. So we add that in, but then we take away or subtract any withdrawals that have already been made by the owner. And that, at the end of the day, is their ending equity, what's still owed to them. So they put in an investment, the company makes income, and then as the owner takes it away, that's them claiming some of that. So we subtract that amount in our statement. And owner's equity really is continuing on over and over for the whole life of the business. So at the end, they just keep growing this amount that's owed to them until they take it out, so until they withdraw it. So this is really over the life of the business. It continues to accumulate year over year. Now for the statement of owner's equity that we're looking at, we're doing this for a period of time. And it's the same period of time as the income statement. So if an income statement's prepared for a year, the statement of owner's equity would be prepared for the same year. If it's done for a month, it would be prepared for a month. All right, so we'll take a look at an example here. Again, as I said, every single statement will start with these three items: the name of the business, what statement we're preparing. So here, this is now the statement of owner's equity, and then the time period. So this was also for the month ended April 30th, 2019, which if you flipped back to this same type of slide, but the income statement, it was for the month ended as well. So here we always start with the opening balance of owner's equity, which is referred to here as capital. So Lisa Hunter capital is just a shorter way of saying Lisa's owner's equity. Lisa Hunter capital, and it's for April 1st, which is the start of the month. You can see here it's 0. And this is because this example is from the textbook. This was when Lisa first started her company. So when you're starting out, you obviously have to start with the beginning balance of 0. So that will be the only time that you see 0, well, likely, the only time that you see 0 as a starting balance is when they're just starting the business out. Now, as I said, we add in investments and net income, and we typically calculate this little subtotal here. And then from there, you subtract any withdrawals. So we show less and add. So this $6,000 withdrawal that she took out. So she already took out what she was owed or her claim of the assets. So that is subtracted to get to our ending capital balance at the end of the month for April 30th. So let's go through an example of our own to create a statement of owner's equity. Here in our example, Harley is the owner of the pet store Tough Toys and Tasty Treats. So as I said, Harley is my pup. You guys will meet her over the year if you haven't already when you're watching this. And she started the company on June 1st, 2020 and invested $10,000 of cash at that time. During 2020, the company earned $45,000 of net income, and Harley took out $5,000 cash for personal use. Harley's year end will be December 31st, 2020. So we need to prepare the statement of owner's equity for this December 31st year end. First thing we will do is name this. I'm just going to be short and say T&T Inc. So Tough Toys and Tasty Treats Inc. We're creating the statement of owner's equity. And now we have to figure out what period of time are we doing this for. So her year end is December 31st. But she didn't start the company until June 1st. So this is actually just for 6 months. Ended December 31st, 2020. Next year, when she has a full year, we'll likely create this for the year ended December 31st. So that will be from January to December. All right, so we always start with the opening capital balance. Harley capital. And you can either say the specific date or you could just say opening. So in the previous slide, it showed the date. Oops, sorry. It showed the actual date. That is fine. It's also fine to just say opening. Now, what is Harley's opening balance of capital on June 1st? Right, she just started the company, so her opening balance is 0. If she had been doing this for multiple years, this question would have told us what her opening balance was so that we knew that. Now, we always look at what we add first. And the first thing that we add in is any investments by the company or by the owner. So if we find that here, Harley started the company on June 1st and she invested $10,000 of cash at that time. So we will add that investment in. Next, we add in our net income that was earned. And again, this net income flows from our income statement. So on our last video, we looked at calculating net income on the income statement. That is where this balance comes from. That's why we calculate the income statement first, or where we prepare it first, because we need to find this net income balance. In our question, it tells us that net income was $45,000. So someone's already prepared the income statement and calculated that amount. And it's good to do this subtotal. Again, if you guys didn't do the subtotal on an exam, that's fine, but it's just useful to show here's what we had before any withdrawals were taken out. So it's just a quick way to separate it, see the amount that was there before any amounts were taken out, which is what comes next. We say less because we want to show the users that we're subtracting this amount. Less our withdrawals, which as you can see out up here, Harley took out $5,000 of cash for personal use. So even though it's her business, as I said before, we keep the accounting of your personal and the business separate. So if she's taking this out for personal use, that is a withdrawal that needs to be recorded here. $5,000. Because we've said less, we need to subtract that. So 55,000 minus 5,000 gets us to $50,000. And this is our Harley capital. And again, since we just said opening, we'll say ending, or you could say closing, or as I said, you could put the date there as December 31st, 2020. So we now know at the end of the year, Harley is still owed $50,000. That's her claim to any of the assets of the business. And next year, when we got to the end of 2021 and we're creating the statement, this balance, this $50,000, would become our opening balance in that following year. So when we created the statement for 2021, our opening balance up here would be this $50,000. So this carries over year over year. And the $50,000, another way you can kind of think of it is, so this is what the owners owed. It's also a quick and easy way to think of what is the value or the overall worth of this company. And you'll see in more complicated accounting, it's not necessarily the case, but here, just quickly, if this is what's owed to the owner after all the years of business, that's kind of a quick and easy way of saying what the company is worth at that time. So we'll look at this relationship as we go through the statements. But the first relationship we saw is that net income from the income statement flows and it gets added into the statement of owner's equity. So that is why we must prepare the income statement first, because we need to know net income to put it in the statement of equity. A good flow in accounting, there's always these relationships that exist between different items. All right, so that is a look at the statement of owner's equity. And in the next video, we'll go through the balance sheet, which is the third statement to be prepared.